Hello, everyone. Are you in the right entity type to maximize your tax savings? In other words, let's keep as much money in your pocket as a small business owner as you can.
Don't give it to Uncle Sam.
That's right. Okay. I'm Lil Roberts, CEO and founder of Xendoo, and I'm here today with Louis Goldenberg, our incredible director of tax, who is brilliant and loves to save small business owners thousands and thousands of dollars, right?
I do.
That's right. Perfect. All right. So what we're going to talk about today is that really you have to think about your entity type against your tax savings. And first, let's start with that. A lot of small business owners may not realize that there is a business entity type and then there's a tax entity type. And what I mean by that is that maybe, as an example, and we're going to take it from the top to go through it, we're only going to spend 4 or 5 minutes here, is that you may sign up to be an LLC, but as an LLC, if you don't elect to be an S corporation, then it's going to flow on your Schedule C on your tax return. So really at a high level, Louis, right? There's a C corp, and what else?
So there's a C corp, there's a partnership, and there's an LLC, and a sole proprietor.
Okay, so we probably see a lot of people that start out their business. It's small. They start out as sole prop, right? And so as a sole prop, they're running the business from their bank account, maybe commingling. And then their first step they do is they go to an LLC. And when they go to the LLC, lots of times they don't make that transition to file as a tax type S corp, right? S election.
So if you file as a sole proprietor or you file as an LLC, Schedule C, that line 31, that net income is also subject to some employment taxes. So if you're making 30, 40, 50, 100, $200,000, you're leaving too much money on the table by giving all that self-employment tax to Uncle Sam.
So let's break it down. What do we mean by self-employment tax? Self-employment taxes is that every dollar of profit that you have besides what you pay for yourself, if you are a pure LLC without it signing up to be an S election, means that you're going to pay 15.3% of Social Security. And once you're above, I think it's 120 or 30,000, 145,000 that you paid, then it only goes to Medicare, that you pay that portion. So so everybody listening, if you're a sole prop or you're a LLC filing a Schedule C on your 1040, just look at last year's tax return. And if that's the case, and you have more than $30,000 in profit, then please call us for a free consult or talk to your CPA and say, hey, I need to be an S election, correct?
Sure, save money.
Save money. That's one of the biggest things that we see that people pass up. What about C Corp? Can you be a C Corp and file your entity type differently or no?
No, a C Corp is a C Corp. And the problem with a C Corp is the only way that the business owner can get money out of it is via salary. The only efficient way to get money out of it is via salary. And then again, you're subject to that high self-employment tax. Whereas if you're an LLC, the S election,
right,
you can choose to take only a portion of your money via salary,
okay,
and a portion of your money just distributions
perfect
from net income,
right,
which is not subject to that self-employment tax.
So most people are C Corps because you have investors, and that's the best protection for investors, or you're a VC-backed company with a technology company, or you're a really large entity, and so that's why you become a C Corp. Now, what about partnerships, Louis?
So partnership, the challenge there is, if you're a general partner or you take guaranteed payments, all of that is subject to self-employment tax.
Wow. So how do you get around that?
So I don't really see a benefit of being a small business with a partnership as opposed to an S corp.
So some people think that a partnership is where you file a 1065. So you're an LLC as a multi-member partner. That's not what you're talking about. LLC multi-member partner, you're going to get a K1 or you're going to get
it's the same thing. A multi-member LLC who gets a K1 also files a 1065. But if you're a small business and you're making, a decent
40
amount of money, $100,000, there's really no benefit to stay in a partnership. You should elect to be taxed as an S corp.
So a partnership can migrate over to a different entity type.
LLC.
The
LLC tax the partnership can.
Okay, perfect. All right. So I know it's all confusing, right? It's the number one thing that we hear from small business owners is that when they say, well, I'm an LLC, and then we say, okay, well, what's your tax type? And they say, well, what do you mean? So a lot of people may not realize that you have a business entity type for the legal side, And then you have a tax type to save your money, right? So you want to maximize tax savings. And then I personally think that everyone should review how their structure is every year, right?
Sure. Well, you can't really change it yearly, but you should definitely review to make sure you're in the right tax type to plan. That if you're in the wrong tax type, you can then switch to the right tax type.
Perfect. So if you're paying a lot of money in taxes, give us a call. Reach out our website, xendoo.com, schedule a consult, and jump on a call with Lewis or one of our tax team. All right. Have an awesome day. Save as much money as you can in tax. It allows you to reinvest in your business, right, Lewis?
Yep. Thank you for joining us, and we look forward to speaking with you.
Talk soon. Bye-bye.